Hello friends, welcome to Trading Couch. So by looking at this chart, we have to look into what are the preconditions that are available. So one is there is a gap up, okay. Then the second one is there is a huge bearish candle on the open, okay, with high open is high, so this is bearishness, okay. And there is a gap, and you can also see that RSI is in oversold area, overbought area, okay. So RSI is overbought area. So all these three indicate that there can be a bearishness or a bearish move to fill the gap. Here we can say, though this is a gap up and this market sentiment is on the higher side, but here forming of the candle, then RSI being at overbought situation, we can say that there might be a slight fall on an intraday basis to fill up this gap. So let's see how exactly we are supposed to go. We are going to trade this. So firstly, we have to draw a Fibo, fine, and mark the 50% to 60% area. So the price has to close above this or get rejected from this. If it closes above this, then we have to wait till the day's high is broken, okay. If there is any closing above this, then we have to wait till the day high is broken comfortably to go on a long position. And if there is any rejection from here, then we can enter here and go till the next resistance. This is not a clear rejection. Now here if we see, we cannot call it as a clear rejection. Let this zone be tested comfortably, okay. Let this zone be tested comfortably. We have a CPR also here, a narrow CPR. So let this zone be tested multiple times, then we'll look for an entry, okay. So here if you look at the chart carefully, there is a bullish pin bar near the EMA and previous day low, and there is a formation of a W pattern, right? And there is also the break of the neckline with a comfortable closing here. So all these indicate what? That yes, you are supposed to go on a long side, right? But we know the Fibo levels here, and we know that the bullishness is confirmed only when a candle is broken here, and now that, and here that we have a resistance and the previous day high. We need a closing above this to know that it is going to go up, right? So till then there is no probability that we'll be going on a longer side. So anyone who assumes this to be a W pattern and the break of W pattern and enters here are basically trapped. There is still no entry. We need a comfortable closing of a bearish candle below this to confirm further bearishness, okay. And you can also have a trend line here, though this is not a valid trend line. For the convenience sake, we can take this as a channel pattern, okay. We can consider this as a channel pattern or the bearish flag, whatever you call it, and let this break, we'll see. Now this is a strong bearish rejection from the Fibo levels, right? So this is a strong bearish rejection. You can see that the RSI is going towards downwards, and there is a strong closing below the previous day low as well, and as well as this is the lowest closing in the entire day. So this confirms bearishness, right? And we can always enter here, and since the bearishness is too strong, you need not wait for a pullback. You can just enter here right at the close. Then the previous day high, previous to previous day high, that is the gap order, would be your target, and 90% of the current bearish candle would be your stop loss. So this is an ideal situation, okay. See, as a person, if you are looking into these trades, and as a trader, if you are in front of the screen and looking at formation of these candles with the bottom tails, you might get an apprehension that what if it is getting reversed from the day's low. There might be an apprehension here that it is taking support from the day's low, but don't panic. There is bearishness, there should be some reason for the stock to come up, right? So we don't have to worry. And here also you can see that near the resistance 2, that is R2, there is a slight consolidation. Whenever there is slight consolidation, it is a good thing that things are consolidating. It might lead to further move down until there is a strong closing above the previous bearish candle. Okay, so till then your entry is safe and your trade is safe. There should be no closing above this. If there is a closing above this, if there is a bullish candle closing above this as well as the EMA, then there is probability of a reversal of the stock. Now one might say this is a place where we are supposed to get panic, right? But still I would suggest that you believe in your analysis. The price is still below the moving average, right? There is no strong closing above this moving average, so we can hope, and if there is any closing above this, then only we are going to exit the trade.